Welcome back, YouTube. How are we doing? What is happening today? It is an absolutely gorgeous Tuesday afternoon, so thank you guys for trickling in here now. And if you do find value in this content, make sure to hit the like button, slap the subscribe button, and let's keep this train rolling. I'm going to go over a brief summary of Gamestop and AMC. A bearish day in the markets all across the board. Crypto, SPY, IWM, but still, I'm keeping my macro thesis. I'm keeping my bullish macro thesis that when in doubt, guys, zoom out. It is the bigger picture that inevitably moves these stocks in the larger way, right? So we got our move below the golden cross, which is not a good sign at all. I'd like to see us just very quickly on GameStop, fill this gap, and then re-establish this base, right? And then continue to climb higher. That is what you're needing to do on GameStop if you want to hold this bullish momentum here, because it was always a very possible outcome that you come all the way back down here and you fill this gap. I really still believe that this golden cross reigns true. So we're gonna have to see what happens here. And I would not like to see this continue to curl down into a bearish death cross, because that is what you got down here. And it led to a little bit of a spillover in the stock from 24 down to 21.96. And if that happened, of course, that is a possibility, right? Coming back down to these choppy levels before maybe finding some kind of, maybe you're going to find this uptrend, right? Because GameStop does have the luxury of one too many uptrends. So maybe if you do not bounce off of this gap fill, you'll bounce somewhere in the low 23s, which would be your worst case scenario. Of course, unless you break this, which I find unlikely because of how much support and resistance you've formed here. Bounce, bounce, bounce. So 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 touches off of this uptrend. I am inclined to believe that that is going to hold, and then that can and will propel us higher if it comes to it, right? It might not come to it, and that's what I'm hoping. I don't want to stay down here too long, but when you zoom in here, you continue to see the story of continuation in decrease of bearish volume. So long term, that is very, very good, and it's good that you're seeing this decrease opposed to an increase. It means bears are slowing down. They're losing momentum here. The only thing I would say on the contrary to this is that you'd like to see a different candle close. These whole bodied bearish candles, like closing all the way at the low here, I'm inclined to believe that this is going to go lower, and it should, right? Getting this kind of bearish close to a candle, unless you see some kind of reversal like this, right? That was a bearish candle. So was that. I am inclined to believe that you may see one more bearish candle into this gap fill at approximately 23.60 and then see some kind of V-shape out of this range. And of course, it's going to matter what the broader market does. So stay tuned for that. But GME still looks really good here. And I'm keeping my bullish bias because every single technical indicator is pointing up on this stock. You look at the weekly MACD. You look at the monthly MACD starting to cross down. So you want to avoid that monthly cross down because this thing has seriously respected each cross. This was your cross up. This was your cross down. So from 23 all the way down to 9. And then this was your cross up from 64 cents up to $120. So this thing has dramatically respected the monthly MACD cross. And then, of course, our lovable quarterly MACD. And I'd really like to see this happen. It's part of the bull case thesis that you'll see this quarterly MACD cross up and then some kind of squeeze-like move up to 73. That being, in case you guys aren't familiar, that is your 1-2. That is your third gap fill on GameStop. and your all-time high fill on GameStop for the whoops, I just ruined that horizontal. That is your highest gap fill that you have on this stock. And prior to the ones that we made recently, that was your only gap fill not filled on this stock, coming from the dilution back in 2021. So I'm really interested to see what it's going to take to propel this stock higher, what kind of fundamental news and or media and or just change in the company, honestly, or what kind of technical setup. But the setup, in my opinion, is there. It's easier to see on the weekly time frame. You had a bull pennant that we had spoken about since back here. Bull pennant, serious consolidation, spring out. This could be your higher low before making that higher high, right? As you've done 1, 2, 3, 4, 5, technically 6 times here. And I'm expecting no different unless proven otherwise, right? So that is GameStop. Not a lot has changed here on the thesis. So we're going to continue to cover and continue to remain bullish, guys. You haven't broken any significant indicators except for the daily golden cross, which sucks, but we'll see how the week closes here. So getting into AMC, our girl Amy. Are we excited? I'm excited. I'm excited for when this thing finally makes its move, because it has just been basing here and coiling and coiling and coiling. And you can see here that you had a respected uptrend that you currently are below. You dropped it today, albeit on lowering volume, right? But what you're also looking at is a daily cross down on the MACD. So I strongly believe in the MACD. It's one of my favorite indicators to follow. So I do believe you're going to see this bearish continuation here, whether it be a fade in volume the whole way down to 271 like we had previously mentioned, like we had first mentioned, right? That was my first initial thought, was that you're going to come down to 271. Let's delete that for the time being. 271, and then make some kind of lower high, lower low, and then really rock, because that would be just a pitch perfect falling wedge. That would really be a beautiful coil and consolidation that if you were able to enter on this down sloping support, you could see some pretty significant gains. And that's kind of what my plan is here. So I'm interested to see how this thing develops going into those lower levels, knowing that we are still within a bullish reversal pattern, guys. We're going to be okay. These things, I think it's like a 70-30 break up most of the time. So unless some kind of crazy news or crazy market news comes out, I really do expect you to break up here. And when AMC breaks these falling wedges, guys, they do so with volume, and that gives me conviction. That gives me courage to potentially make a long here and reap the rewards, because even if you make a long here, right, and let's say you set your stop loss at 262 right below, or 270 right below our 271 price target, then you are potentially, right, depending if you're swinging up to the 200 or if you're going for our long-term macro target, which are these 3 gap fills above us, which I do believe will come. Let's say we strike along at 271. Your $5 horizontal resistance gives you 100% price gain. Above that, you have your $13 target giving you a 378 price gain. And your $19 gap fill at 616. And then, of course, the one, the only 43, baby, giving you a 1,500% gain. So if you do the risk to reward ratio, right, setting a tight stop loss. And that's why I initially called my channel trap trades, because these trades are risky. They come with an inherent risk on asset, right? That's what it's called. But if you play it smart, if you hold a tight stop loss and you pick the perfect entry or a good entry at that, you can make significant sums of money. So that is my trading thesis on AMC. I do believe you're going to break out of this falling wedge. For those long-term bullish on the stock, I salute you because I do believe you are going to see this macro double bottom. And I'm rooting for you guys every single step of the way because retail deserves its win here. Let's see on the weekly. So you have rejected this macro trend line that we had previously spoken about. On the monthly, not a great monthly candle. You're currently printing a shooting star after getting outside of this formation. So we're going to see how this develops as October progresses here. But one thing is for sure, on the monthly time frame, you are coiled, and it's kind of stupid. See a touch, a touch, a touch, a touch, a touch, a touch, and then a break on the monthly time frame. So two things can happen. You can go into the bottom of this and not spring. Maybe you go into the bottom of this and you print some kind of disgusting graveyard doji, and then you go, or you just continue to break out. Like, come on, do the dirty, AMC, do the thing that we've been waiting for. The quarterly chart, you can see how close you are to getting the quarterly MACD cross almost, and I would say even more valid than Gamestop's. I think you're closer to crossing on AMC than you are Gamestop. And to give you guys some perspective here, going into the cross, your quarter was 381%, guys. So just give that some time to digest. And then the following quarter, you guys can see the candle. It's 455%. And then you saw a crazy bear market for AMC. So this thing historically has followed the quarterly MACD pretty well. And I'd like to see it do it again because the setup is there, ladies and gentlemen. You have a macro double bottom with a quarterly MACD flip, a macro double bottom with a quarterly MACD potential flip, right? So if I was to long shares on AMC, I think anything below 280 is immense value here. And I think regardless, you're going to come out okay for the most part, right? Of course, not financial advice. I'm not a financial advisor. But most of the time, if you strike along down in this range, let's draw a horizontal marker. You can see price has almost always $4, $3.60, $3.20. Oh, boo-hoo. Look at where we bounced here. All the way up to 11 and then up to 350. So 280 is just historically on AMC so far a very strong resistance. And we'll have to see being at 284 when this thing does decide to turn around. But I do like that there is decreasing volume, just like GameStop. I just don't like the full-bodied candles here, and I think you're going to see some kind of progression, unfortunately. But that's what I'm here for, guys. I am here for each and every single one of you guys because I want to make sure that you feel okay in your investment. You feel like you know what's going on, or at least you're learning along the way, right? That's what I'm here for. If I can make one of you guys feel a little bit less crazy and help you get some sleep, right? Help you get something or some kind of knowledge out of this, that made it worth it for me. So, because I have definitely been there. This was my first ever stock, and boy, was it a roller coaster. This thing takes you on dips and bends and troughs, and skyrockets and graveyards. So that has been my coverage on GME and AMC. If you guys found value in this, please slap the like button and smash the sub button. I love and appreciate all the people who have given me donations. It's a tremendous motivation for doing what I'm doing. And I just want to give a shout out to, I'm going to say the name. I'm just going to bring it up because you deserve some screen time. My man JCK CPA. Thank you so much, brother. And if you ever want to ask questions from these donations, that's what I'm here for. If you guys want specific videos that you want to donate for, please do so, because I am eager to help you guys learn and to really set aside some time. Not so much one-on-one, right? But this is more so you're asking the question and I'm not only bringing you the answer, but there's probably thousands of like-minded retail investors that have the exact same question. So I always say there's no dumb question unless you make it dumb. So thank each and every single one of you guys for sticking along. I appreciate, we're almost at 1,000 subs, so let's get there. And I'll see you in the next video. Neo next. Woo! Neo!